Hey, good morning. Welcome to this week's Forex commentary. And yeah, this is dollar index. This is a monthly chart, and the reason why I'm starting off of the monthly time frame is just a reminiscence of um the first video I produced this month when I was talking about this candlesticks range and this one and this candlestick, and I was talking about how this one is supposedly bearish, but we're trying to just determine how the market is going to unfold. And we had really insane price action this month, especially with the gaps. Honestly, I think I'm still trying to handle gaps. And this period actually taught me a lot. Yeah, I must say I really learned a lot from this price action, and it's something that you know it's in the notes definitely. Anyways, last week we traded through sell side here, the previous monthly low, and we're talking about height from institutional order flow, which is bearish for dollar index. And since we met objective the close of this gap, we haven't been wanting to see any upside delivery on markets. Maybe except there was a weekly bearish order block, but which is just slightly above this high. And worst case scenario, if they run through this previous monthly high, that would have been like perfect. But notwithstanding, we now have sponsorship in the direction of the high different buyers, and which is pretty much crucial for our our expectation, because if you're bearish and markets runs through an old low, you are expecting a possible retracement into the range, then like an OT sort of price action. Okay, so around if you're bullish and market runs above an old high, you can expect them to reject and continue into the previous high. Okay, so that's basically it. So that being said, on the weekly chart, if you look at dollar index on the weekly time frame, all right, so we have this old weekly gap, and we had this is where the bulk of the consolidation has been in the past couple weeks, failing to get into this gap here, and now returning to this gap, and staying above this gap. Now we're below this old gap. So this used to be a key level of support, and now market closed below it. The question is, this price is going to return here or not. Now the thing with inversion fair value gap is this: when the market inverts a gap, all right, your first priority is to understand that the whole point of the inversion is telling you like a shift in sentiment, or right, but from bullish to bearish, and market is gonna reach for the next opposing PD area. All right, so in this case we're bearish and market has been consolidating here, and now that prices have closed through, all right, the first thing that comes to your mind is now we are bearish. Okay, and if you look at this price action, we have like overlapping levels around here. First off, we have this previous weekly low, this candle. Okay, if we put this candle here, this is a weekly bearish order block, right? And trading into another bearish order block. So this is the propulsion block. And when you see propulsion block here, and markets probably shows willingness to return into this candle's low, okay, there's a very high tendency the markets don't trade back here. But now, how do you validate if the market is going to trade here or not? That's when you use, time of day, day of week, because this is the weekly chart, and we have 5 trading days. Now, unfortunately, today is a bank holiday, and usually on Mondays, me personally, I don't want to say we, if you want to trade the weekly range, even if I say execute per se on a Monday, I don't think I would always be willing to hold it for like a long-term position, or see it as a long-term entry, because sometimes Tuesday always returns into Monday's range, through Monday's range, that's above or below Monday's high or low and stuff. So that's why I wouldn't want to be engaging really on Monday, because I just want to see everything going on. But if you look at this week's price action, unlike the previous weeks, everything from last week already set up this week's trading. For example, we have a key level already, and we have this level already. So we have major levels overlapping here. So it's kind of like a sign that, okay, if this trades on Monday at the appropriate time of day, it's something you wanna, execute on, right? So we have this level here, the weekly very short block, and the inversion fair value gap here, and yeah, basically that. So now on the daily chart, this is what we're seeing. On daily time frame, we have this fair value gap here, and this old new day opening gap. I mean, this was for something else. This was for Thursday's trading. I mean, and yeah, so we have this old low, today's trading. So we want to see what happens today, if markets are willing to return here, or possibly markets returning here. Now, like I said, looking at the weekly time frame, okay, my priority here is for the markets to show willingness if they are going to return to the old weekly gap. So this old gap, market ran through, closed below on the daily time frame, you can see, and traded through, didn't exactly touch it, but this in itself could just qualify as market returning into the old weekly fair value gap. Okay, and now we have something else. We have this weekly low. This becomes our new premium array. Okay, so as soon as Monday's trading is done, for example, if Monday consolidates inside Friday's range, say it's a small body candle like this for the rest of the day, this becomes very, very high probability. Why? We now have a daily fair value gap here, and this candle consolidates. So a run through on this high into this low, that's the sell, and you want to aim in for sell side liquidity here. And dollar index is pretty much still bearish. We're still just seeing more confirmation for bearish dollar prices. So but sell side here first. All right, we could still assume more sell side objective, but if you recall, the reason why I had sell side liquidity pool here, that's at the start of I think February's trading, was this was the midpoint of this current dealing range. All right, so if you look at this range from low to high, so you can see this is equilibrium price point. So this is equilibrium here, and this is nearest sell side to equilibrium. So sell side here into what, this daily order block. This is objective. Now, can markets run through here and in fact even trade lower, like we have this old breakaway gap? Of course, why not? And even trade here, of course, why not? But for short-term trading, which we want to assume this week, you know, this is our low hanging sell side objective on dollar index. So there's really nothing, and we're just having all of this. Now, mind you, is very possible today being bank holiday, markets begin to expand, and how what you're going to see is market running below Friday's low, previous day's low, sell side. Okay, and when market hits sell side, of course, that's an objective for the day. You just want to wait because the daily candle could just reject back into Friday's range, and Tuesday just still forms the high of the week. So you just want to be careful in that regard, right? So we move on to the week, the daily chart, Euro USD, and it's kind of like pretty straightforward since we've defined what we want to see on dollar index. And here, this we had sell side here, market structure shift. We're looking bullish here, and market just gap through and reaccumulated back into the bodies of the candle. And this is one of the very funny things, when you're looking at dollar index to be like the driver of all of these foreign currencies and stuff. Last week, my expectation was first dollar index could likely draw into the bodies of this candle, although this was already verified that it wouldn't happen post CPI. So CPI is closing, it was very obvious that markets aren't coming here anymore. But when you look at Euro USD, Euro is trading to the rejection block, and you can see how all of these things it kind of like happens. It doesn't happen here, it happens here, but still, next time when I see it, I'm gonna make the same assumption, right? And just allow the daily candle closure to just validate buys and all of that. So the only reason why I was able to adapt last week is because I am traditionally bearish on dollar index, and when I begin to see candles sticks validate bearish, I mean it's something worth the risk. And it doesn't mean I haven't taken a loss trying to be bullish on Euro USD in the past couple of weeks, and that's what's even insane. But I think this week's trading is going to be awesome, and let's see how it goes. So first off, we have this old daily fair value gap here, and we have this gap here. So do I think they're going to trade into this gap? I think it's low probability thinking markets will trade into this gap. Okay, for me, because we have an old gap here. I think the markets are likely to just retest this. Our markets are just likely to retest this gap. Markets will just retest here, and just expand into buy side objective here, this fair value gap. So we still have quite a range, yeah, and we just need to be patient, really, and just look at key levels on the higher time frame. This is the inversion daily fair value gap. That's the PDRA I'm watching on Euro USD, and it's kind of like different on GU because GU has a clear daily fair value gap. Okay, so sell side taking here, sorry soup, reaccumulation to discount into the bodies of this candle, rejection block, and expand, breaking market structure. In short-term trading, this was a model I was talking about when you have a Tory soup and markets reaccumulate into discount. Okay, just like the redistribution to premium we're looking at on dollar index to the bodies of the candle. Okay, the reaccumulation to discount, and then when markets expand, any near-term imbalance. Okay, that's this fair value gap, for example, on GU. So GU seem like you're gonna just utilize the daily fair value gap, and buy side liquidity is resting here, and just want to see how everything pans out. So this is pretty straightforward this week, and I really wishing everyone good luck because everyone is gonna be needing it. So on to the next one. Be safe.